What's up, Paimon's Bulletin crew? Get ready for a whirlwind of news that's going to shake up your world. First up, we've got Tencent considering a massive offshore RMB bond issuance, potentially happening as soon as this month. This could be a game changer for their financing strategy, and we're diving deep into what it means. Next, we're pulling back the curtain on Tencent Holdings itself. Is this tech giant a solid investment? We've got the breakdown on their earnings, revenue, and what insider activity tells us about their future. You won't want to miss this financial deep dive. Then, we're heading over to the UK, where the interactive entertainment industry is getting a massive boost. UKIE is partnering with Tencent once again for their video games growth program, designed to help ambitious studios scale up. We'll explore how this collaboration is shaping the future of gaming. And finally, hold onto your hats, because the Hong Kong stock market has just hit its highest level in over 4 years. We'll look at what's driving this rally, with tech giants like Tencent Holdings leading the charge. You won't want to miss a single second of this. Hit that like, subscribe, and ring the bell so you never miss an update. Tencent's major offshore bond debut. Get ready, because Tencent is reportedly considering its first offshore RMB bond issuance in 4 years, and it could be happening as early as this month. Bloomberg sources indicate that investment banks have been actively gauging investor interest in these so-called dim sum bonds. While the plan isn't finalized and terms could shift based on feedback, this move signals a significant potential shift in Tencent's financing strategy. The company currently has substantial bonds maturing in early 2026, and this issuance could be a strategic way to manage those obligations and tap into new capital markets. The market is buzzing with anticipation to see if Tencent will indeed proceed with this major financial move. Investors are closely watching Tencent's financial maneuvers, with many seeing this potential bond issuance as a sign of confidence in its market position and a proactive approach to managing its debt. Analysts are keen to see how this impacts Tencent's overall financial structure and its ability to fund future growth initiatives. The move has sparked considerable discussion across financial forums, with many anticipating the details of the bond offering. Will this bond issuance be a masterstroke for Tencent's financial future? Find out next as we explore the incredible rally in the Hong Kong stock market. Is Tencent Holdings a stock worth watching? Let's cut through the noise and talk about Tencent Holdings. While some investors chase high-risk, no-revenue ventures, Tencent is a company that consistently delivers profits, making it a potentially strong long-term value play. Over the last 3 years, Tencent has seen its earnings per share grow by a healthy 7.4% annually, and its revenue jumped 12% to an impressive CNY 704 billion in the last reported period. These aren't just numbers, they represent tangible growth and a solid foundation for shareholder value. Furthermore, a significant insider ownership, worth a staggering CNY 445 billion, aligns leadership directly with shareholder success, a reassuring sign for any investor. This consistent EPS growth, coupled with substantial insider commitment, makes Tencent Holdings a compelling candidate for your watchlist. The company's financial health is robust, with a flawless balance sheet and a solid track record. Analysts are forecasting continued positive performance, making it a company to watch for steady, long-term returns in the dynamic tech sector. But is Tencent just a solid performer, or is it part of something even bigger? We're heading to the UK next to see how Tencent is fueling the future of video games. Tencent powers UK video games growth. The UK's vibrant video games industry is getting a major shot in the arm. UKIE, the games industry trade body, has once again partnered with Tencent, alongside the Department for Business and Trade, for the second year of the highly successful video games growth program. This initiative is specifically designed to help ambitious UK studios scale both creatively and commercially, building on the success of its 2024 launch. This year, the program offers 2 distinct pathways: an accelerator track for emerging studios ready for their first big leap, and a scale-up track for established companies with high growth potential. Mark Maslovich, VP of Partnerships and Investments at Tencent, expressed excitement, highlighting the UK's position as Europe's largest video games market and Tencent's commitment to cementing its status as a global development hub. Participants will benefit from expert-led sessions, mentorship, and crucial insights into funding, business strategy, and international expansion. This collaboration is already generating buzz within the UK development community, with studios eager to apply and leverage Tencent's global expertise and resources. The program's focus on practical skills and investor access is seen as vital for nurturing the next generation of gaming talent and ensuring the UK remains at the forefront of innovation. Applications open soon, promising to unlock new potential for studios across the nation. Speaking of growth and innovation, get ready to see the market soar as we reveal the latest surge in Hong Kong stocks. Hong Kong stocks hit four-year highs on rate cut hopes. Get ready to celebrate, because the Hong Kong stock market has just reached its highest level in over 4 years. The Hang Seng Index surged 1%, closing at 26,200.26 points, fueled by optimism that the United States Federal Reserve will cut interest rates this month. This positive sentiment is driving investor appetite for risk assets and triggering significant inflows into Asian markets. The Hang Seng Tech Index also saw a healthy advance, with tech giants like Tencent Holdings and Alibaba Group leading the charge. This rally, now in its 4th consecutive session with daily gains, shows sustained upward momentum, bolstered by steadily rising trading volumes that are giving investors more confidence to join the upward trend. Analysts at Wing Feng Financial Group noted the buoyant investor sentiment, driven by ongoing rate cut optimism. This impressive performance has captured global attention, with investors closely monitoring upcoming U.S. inflation data. A controlled inflation outlook could support further gains, but any sign of renewed price pressure could trigger profit-taking. For now, the market is riding a wave of positive momentum, marking a significant milestone for Hong Kong equities. And that's just a taste of the incredible news we've got for you today. Stay tuned for our lightning round recap, and don't forget to subscribe. And that's a wrap on today's Paimon's Bulletin. We saw Tencent considering a massive offshore RMB bond issuance, Tencent Holdings showing strong fundamentals and insider confidence, Tencent partnering with UKIE to boost the UK video games industry, and the Hong Kong stock market soaring to its highest level in over 4 years. Don't miss out on future updates. Hit that like button, subscribe to Paimon's Bulletin, ring the notification bell, and let us know in the comments what you think of today's news. Follow us on all social platforms for more exclusive content.